Almost all price indicators introduce lag, and that's why almost all traders miss prime entry points due to this delay in the signal. What if I tell you that there is a way to remove or reduce this lag? In this video, we will explore Laguerre RSI. It's a unique twist on the classic RSI indicator that promises to smooth the indicator without introducing lag. I will also show you my own additions to this indicator to make it even better. To bring this idea closer, let's think of a moving average. So the moving average has a look-back period. Basically, the moving average is averaging all the prices over the look-back period to smooth the price to get rid of noise. And by doing that, it introduces lag. So the longer the look-back period, the smoother the line and the bigger the lag. So John Ehlers developed a method that uses a mathematician filter, which is Laguerre. He's a French mathematician. And he uses that filter and built the RSI around it and basically came up with the Laguerre RSI that promises a smoother RSI indicator. If you're interested, this is the schematic of the Laguerre filter that John Ehlers used it to produce this smoother RSI. The idea behind it is to make the indicator react quickly to price changes without a lot of lag. What's interesting also, it's this indicator does not have a look-back period. Instead, it has a value for a dampening filter. So the only optimization you have is the value of the dampening filter. But as you can see, it's an oscillator that goes between 0 and 1. So if we plot the 0.8 and 0.2, basically it will be like the RSI oscillator. And for a market like the S&P 500 index, we can use it to build mean reversion strategies to go long when it's below 0.2 and exit when it's above 0.8. So this is the strategy that it's built around that. Basically, we go long when the price dips below 0.2, we exit when it's above 8. And these are the results of the strategy. 118 trades, 73% win rate, 500 average trade. It's actually a very good strategy already. Now let's look at this indicator a little bit deeper. So let's optimize the dampening filter between 0.1 all the way to 1. And let's see what we get. So it's 10 optimizations. And this is what we get. First of all, at 1, there are no trades. And then at 0.9, we have only 16 trades. Now here I have data since 2007. So that's 17 years of data. And this is less than 1 trade a year. So this is not usable. So I went the other way. Since we cannot go up, I wanted to go down. So here I went to 0.001 all the way to 0.1 in a step of 0.001. So we have 100 combination, and let's see what we get. So the number of trades goes to 301, and at 0.1 the number of trades is 0.259. So you see that actually all these iterations doesn't matter. What matters is only this one, because that one produced about 300 trades, and then at the end of the scale it's about 260. And so based on that, I added my own additions to the indicator. So first I changed the dampening filter to be capped from the lower point to the upper point. So since 1, as you saw, doesn't matter, the maximum point we can use is 0.8. So I capped this at 0.8. And then the lower point is 0.1, but also 0.001 is good. So what I did, I made the changes from 0 to 8. 0 will correspond to 0.001. And then all other numbers will correspond to the decimal. So from 0 to 8, that will go, it's like from 0.001 and then 0.1, 0.2, 0.3 until 0.8. So this will make it a lot easier for anybody to optimize between 0 and 8. Also, since now I'm using 0 to 8, these are whole numbers, I changed the scale instead of from 0.2 to 0.8, where these are the levels. I changed it to be from 0 to 100. So now it's very easy to compare it with the RSI because we have the same levels, and also very easy to optimize. And here we can see the difference. So this is LRSI with my additions, and this is the original LRSI. And we can see that this goes from 0 to 1. Mine goes from 0 to 100. And this one uses a dampening filter that goes from 0.1 to 1. And mine goes from 0 to 8. Because as I showed you, that once you're above 8, there are not many signals. So no point in generating them. So now if I, let's say, put this at 5, that means this one at 5. And if I go here to 8, that means this one will be 0.8. So as you see, both are exactly the same. So now that I know these are exactly the same, I will get rid of this and we will use my modified RSI to build a strategy. So here is the strategy, the same one we started. It's when we go below 20, we go long, above 80, we exit. And here we are using 5. So you see here the dampening filter is 5 and I'm using the same one, which is 5. So now I can optimize this strategy. So here is the optimization for the strategy. We will go from 0 to 8 in a step of 0.25. And buy level 5 to 40, step 5. Sell level 65 to 95, step 5. Remember, the 0 means 0.001 in the original indicator. And then 1 means 0.1 in the original indicator. But these are capped. So the maximum is 8, the minimum is 0. And now I can do it in a step of 0.25. So overall, I get 33 variations. And that's the maximum that this indicator can produce in terms of look back. And here I made the levels different just to have enough variation. So you see here we have about 1800 strategies. So if we filter the generated strategies with 80 trades, minimum of 80 trades, we end up with 95 strategies. So out of 1800 variations, only 90 produce more than 80 trades. And even then, the maximum number of trades we get is 112, which is very low number of trades. And that is the drawback of this indicator, which is because you're removing the lag, you're removing the ability to generate more signals and then add filters. It's like the filter is built in, which is removing the lag. So that's kind of acting as a filter because it doesn't matter what you do here. It's hard to generate more than 120 trades. And over 17 years, that's really low. So in this case, then you cannot add another filter to the strategy. That's it. You need to pick the strategy here. So now I can sort by return to drawdown. The maximum I have is 259. And then, of course, very good average trade, 1500. And best win rate is about 80%. Best profit factor is 247. So these are the settings for the best strategy. It's the dampening filter is 4. That means in the original filter is 0.4. And then buy level is 30 and sell level 65. So in the original indicator, it will be 0.3 and 0.65. So this is the strategy, 81 trades. It's about a trade every couple of months. Very good win rate, 76, and excellent average trade, which is $1,500. This is how the curves looks like, and it's very smooth. This is the annual period analysis. The biggest drawdown happened in 2008 for these settings that we picked. And then the next drawdown we have is in 2022. But again, we see, look at this, it's 3, 5, 6, 3. So if you build a strategy on this indicator, it definitely need to be mixed in a portfolio. So to compare it with the RSI, here is the RSI and here is the Laguerre RSI. And I picked a strategy here that produce about the same number of trades. So this is the Laguerre RSI and you see 81 trades. And here I picked RSI 5 with these levels, 35 and 85. And you can see this is around 80 trades. About the same win percent, 80 and 76. But look at this. This is 2,200, the average trade, compared to 15. And if we look at the performance, so this one 175, this one 127. The return to drawdown is almost the same, 26, 29. And then if we look at the curves, you can see this is the COVID. But here, the volatility is much higher. And looking at the annual period analysis, 2008, 2022, same thing, 2008, 2022. But because the average trade is much bigger, you can see that both drawdowns are a lot higher than this one. And see, this one is 40,000, this one is 5. So this is the recent one in 2022. But on the opposite side, you see it's making a lot more money when it makes. So 2021, this one made 54,000, this one is 14. 43,000 this year, this was 21. They both can produce reliable strategies, and they produce different equity curves. And that's what I usually focus on, is can I get the same logic using the same edge, but produce a different equity curve, in the hope that I can build a portfolio that smooths out all these drawdowns. Of course, in this case, what I showed you is exactly the same strategy almost, because they have the drawdown at exactly the same time, which is not optimal. What you want to mix them that they don't have the drawdown at the same time. But the idea of using the filter to remove the lag is very appealing to me. And probably I will add this lag filter to other indicators and see what they produce. To learn more about the RSI indicator and the strategies that I built with it, watch this video and I will see you there.